Morning, everyone. My name is Akena at Sessions, a knowledge session that holds every Sunday at 9 a.m., currently on YouTube, previously on Instagram, and it's an honor to host this session every single week. And for this week's episode, we're talking about taxes, especially taxes related to business. I'm a business owner, and I have been praised to having the lack of knowledge in paying some taxes that I've had to talk more about it. And welcome everyone here. And currently we have our guest for this week, Oladele. Oladele has been a friend, he's a friend of mine, but I would let him introduce himself. He's a Mervyn when it comes to accounting, taxes, audits, and the likes. So welcome Oladele to today's episode. Oladele, can you give a brief introduction about yourself, what and why you're here today?
Okay, hi, good day everyone. Welcome to another session of KR session. My name is, as the host rightly said, my name is Oladele Dubemi. So basically for me, I started my career with PwC, where I spent like 4.5 years of my life. There I got to audit various clients across various industries. And that gave me a first-hand understanding of what businesses see in terms of accounting, tax, and compliance with laws and regulation. I went on to join I won't say startup, a business that was barely like 3 years old, where I helped them manage their books in accounting, helped me manage in terms of interacting with the tax authority, trying to ensure they are compliant and ensure their books are in proper order. Then I moved on to my current role, which is financial reporting accountant at a multinational business, which is like the lead producer of aluminum cans, right? So there I handle compliance with taxes, I also handle reporting, and also handle some level of financial control and business process improvements. So here today, I'm here to talk about taxes for business owners, trying to educate them about what they should know and why they should know it, and the importance of being compliant in terms of laws as related to taxes. Yeah.
Fantastic. That was straight to the point and very quick. Okay. So,
yeah.
And I'm sure you know I reached out to you quite a number of times concerning, okay, so do I need to audit this? Do I need to pay this in terms of taxes, my accounting, my booking? You're literally my wingman when it comes to anything finance, to be honest. So,
yeah.
I know when I first started my business, and a lot to this, especially if you're micro or even if you're medium, hiring the knowledgeable people within those sectors to actually help.
Mm-hmm.
I was confused as to what tax I should pay. Mm-hmm. My business is based on states, right? So first of all, I want you to letting us know what are the foundational things, what are the foundational knowledge that business owners need to know about taxes in Nigeria and maybe region-wise.
Okay. So typically for what you need to know about taxes is that first, there are two tax authorities in Nigeria, right? Which you refer to as the one at the federal level, which is the Federal Inland Revenue Service, and what we call the State Internal Revenue Services. The State Internal Revenue Services are resident in each state, right? So by virtue of the state, they are responsible for taxes in that state, right? So now, as you understand the two tax authorities involved, now you need to know what kind of taxes are those tax authorities responsible for. Now, your Federal Inland Revenue Service is responsible for your value-added taxes. Yeah, they're also responsible for your withholding tax. Right? They are responsible for your CIT, which is your company income tax, and they're responsible for your education tax. Some level of PE, which is your personal income tax, goes to them, but those are the ones relating to like people within the military, paramilitary. Right? Those are the people that their PE goes to them. For the state, right? So now, based on the state is responsible for personal income tax, also responsible for withholding tax, right? Then in Lagos State, the state is responsible for consumption tax, which is applicable to restaurant businesses. Now, what you need to understand is that you would notice that there's an overlap withholding tax state level and at the federal level. Now, withholding tax itself is an advance payment of tax and it's not the same thing as VAT. So that's the first confusion. People first think that VAT and withholding tax are the same. So just to be clear, they are not the same. right?
Okay.
So that's first thing. So you raise an invoice and issue it to a third party. Person's going to withhold tax on it, not necessarily equal to what your VAT amount is. Now, it even makes it difficult now because your VAT is at 7.5% compared to before where it was 5%, where you had transactions that required withholding tax and they also 5%. So at that point, people say, oh, they're the same thing. But now there's one at 7.5%, in which there's no withholding tax at the rate of 7.5%. It makes it clear, right? So there should be any form of confusion that are the same thing. But for you to identify the one in which you remittance to the state is and the one remittance to the federal, you need to understand who are you dealing with, who is the provider of that service. Now, typically, what you use to identify the withholding tax that we pay to the Federal Inland Revenue Service is to say the person who has provided that service or supplied that good, who is he registered as? Is he a business name? Is he a sole proprietor? Is he a partnership? Is he a limited liability company? Now, that will tell you who to remit to. If you're a limited liability company, your withholding tax, or sorry, if the vendor who has provided that service or delivered that product is a limited liability company, the withholding tax on this transaction will be remitted to the Federal Inland Revenue Service. But if you're a partnership or a sole proprietor or a business name, typically your law firms, your audit firms are usually registered in that format. Your withholding tax will be paid to the states where that business is registered as. Yeah. So it's clear cut that you understand that basic principle. Yeah.
Okay. Okay. Fantastic. All right. So why am I paying so much taxes, and what's the difference between the value added to the withholding, to the CIT, to the education? Yeah. Why am I paying education tax? I know that the education system is what it is in the country.
Okay. So all right. So let me start with education tax. The educational tax was actually created to find a way to support the educational system. So instead of the government walking up to companies and saying, "Oh, give me grants to support the education," they created that education tax so that a form of support. So basically, most of us who attended federal or state universities, we actually a product of that fund available from the education tax. The computation is quite different from your company income tax because it's 2% of your accessible profits, right? The accessible profits is another story. A technical person into tax would explain to you, but it's different from your taxable income, right? Which your CIT is based on, right? So it's basically different. So your CIT is based on 30%, your education tax is based on 2%. Then typically your company income tax, depending on the size of business. So for example, as of now, based on the newcomer, if your total revenue is below 25 million, you don't pay company income tax anymore, right? But if your income is between 25 to 100 million, you pay at 20%. Then anything over 100 million will be at 30%, right? So that's a simple way to differentiate between your CIT and your ET. That's your education tax. Then withholding tax. So the idea is your government is run on a day-to-day basis, right? One way or the other, they need funds to be able to repair roads, provide power, some funds in other sectors just to run the economy, right? So the idea now is my CIT is only paid at the end of the fiscal year, right? Within 6 months after your financial year end. So if your business has a year end of say 31st December, you are required to pay your CIT before 30th June of the following year, right? However, if the economy or the government decides to wait till 6 months after a fiscal year to get the money required to run the economy, they will most likely run out of cash. So the idea of, oh, let us withhold, right? Meaning that you provided a service, you've delivered that service to a third party. The third party who acts as an agent is responsible to withhold on that transaction, right? So now there are various rates that apply depending on nature of service. For example, rent is 10%. A contract of service or supply is at 5%. A professional service is at 10%, right? So I withhold on that transaction. So I've issued an invoice to, for example, Pandora issues an invoice to Glider Consulting, right, for digital service. That's the contract of service. So you've issued me an invoice of 5 million. That 5 million does not contain your VAT. For the sake of argument, my maths is not available at the moment. But let's just say the total value of the invoice was 5.3 million, right? In which the 300,000 was a VAT on it, for just an example scenario. Now you apply that 5% on the 5 million and not on the 5.3 million, right? Because that is the contract sum. The VAT is a value added tax, right? You are only just charging it on behalf of the government. You are not, it's not your money. It's the money that you just, for this value added service, the government owns that money. You're only acting as an agent to charge it and pay for it when the responsible party for which you have delivered that service pays you for that service, right? So now the next step will now be, oh, I have that service has been delivered. Me, Glider Consult, to get an invoice from Pandora, who is my vendor, and I deduct 5%. So my 5% on 500,000 is 250,000. So I deduct 250,000 from 5 million. Yeah. And that's the money I pay as withholding tax to, for the sake of argument, she's a limited liability. The business is a limited liability company. So I pay to the Federal Inland Revenue Service 250,000. Now, because I'm able to pay on a transaction basis, that money is available to the government to run the economy, right? On a month-to-month basis,
Okay.
because I remit my withholding tax every month, right? Based on the transaction that have occurred in the period, right? So that they usually have that money. But the idea is that it's an advance payment of tax, meaning that in reality, if the person or me as Glider Consulting have enjoyed that service and are paid for withholding tax, the government is required to give a credit note, right? The credit note is an evidence of the fact that someone has remitted withholding tax on your behalf, right? So that when you now want to now pay your company income tax, you would use that credit note to say, oh, your company income tax at the end of the year is, for the sake of argument, is 5 million. You can actually now say, with all the credit notes that you have, right, that relates to that or periods earlier, I can now say, oh, I have 1 million worth of credit notes. My company income tax is 5 million. So I can say I will pay 4 million in cash and 1 million in terms of credit notes. So one responsibility you have is to follow up with your customers to ensure they remit their withholding tax and they provide evidence of remittance. So you can either get evidence of remittance in terms of credit notes, or they provide a schedule that says, oh, this is a schedule of my remittance. This is Pandora with this TIN number located in this address, contract sum, the rate and the amount deducted and the remit, and they send it to you, right? Because you can use that properly stamped with evidence of payment, that's the receipt they get from your the Federal Inland Revenue Service, as evidence that that was actually remitted to them. Now, during the last tenure of the former FRS chairman, we had a platform where you could actually go and download your credit note online yourself, where you could see your taxes have been paid, withholding tax have been paid on your behalf, where you could download credit notes. However, they've moved to a new platform called Tax Pro, right? As of now, there's still a lot of back and forth as regards being able to get those credit notes, right? But with the help of a consultant, they can actually write to your tax authority to validate that, oh, this amount of withholding tax have been paid on your behalf, and this is the list, and they are valid, and you can use it to offset your income tax, right? So that way, you don't get to pay, you don't pay in excess. If you go and pay full cash, that money you could actually use in doing other things in your business. So you should actually keep track of your credit notes and then ensure you get those credit notes physically, or get your consultant to help you validate those credit notes with the relevant what's called it, where your tax office is, right? To get that for you. Now, so that would help
Before
you
you
in terms of
continue, Ola,
yeah.
I like the fact that you're mentioning the credit note, because the first time I ever came in contact with credit notes was a couple of weeks ago. So there was this client for, and they were not remitting withholding. And we said, please, evidence and all that and all that. So I think they gave us I think they actually gave us a schedule of how it's going to be paid and all that. It's actually a state-owned establishment, as the case may be. You know, so we were kind of going to pay it, but it was the first time for a very young company like mine, you know, to me they would actually pay it, because when it comes to taxes, I do not want to owe federal, I do not want to owe states, because you know when you want to bat or bid for things like those, things will come in question, especially if you're trying to get CCC certificate. But 3 years in the statistics, you know, so I'm very, very glad for that. That's why we're having this knowledge sharing session for businesses. To get TCC is actually not hard. My course is amazing. Yeah. Knows. So it's someone, and they actually came on this session about 2 Saturdays ago. So please feel free to go and watch the session of bookkeeping. So that I know that for us to pay taxes in Nigeria, knowledge. When people do not know something, it will be hard for them to conform. And we are very, very bad. Our government is very, very bad indicating how it should be. FIRS, they're actually trying now, you know, a year or 2 years, nothing like not like educational in terms of taxes that have been done. But this is actually good, and I'm really happy that you're mentioning that. But in a case whereby your customers do not provide the evidence of the schedule, what can you do? And you know that you need that to pretty much finalize your books, maybe for the month or whatever, for the year. You know, what do you do in that instance?
So the truth is that it's a tough call. So, for example, your customer has not paid withholding tax. In reality, it's more of, you tell yourself, a continuing relationship with this client is good for me, right? Because typically what should happen is people should actually report and say, this person has not paid withholding tax on my behalf. But before you get to that last resort, which is basically, because when you report, you're almost tarnishing your relationship with that existing customer, right? Which is not really good for you, because obviously whatever you gain from being in a relationship with the person will surpass that withholding tax. What you can do is make reference to the fact that they need to remit, explain to them the importance of remittance, and ensure you follow up well to tell them, see, provide evidence of remittance to me. If they are not providing evidence of remittance to you, the onus is yours to pull. Like, if you cannot provide evidence of remittance, then pay me my full amount, right? Pay me my full amount if you're not remitting, because the idea is, if you're not remitting, it doesn't pay me on the long run. You're just withholding money, and it's like you're short paying me, right? So it's more of, you'd have to just find a way to manage them and get them to either pay or pay the full amount, right? Your last resort would be to report to the tax authority, but that is a dangerous line to shed if you are not, obviously, you want a good relationship with your client, so you don't want to go to that route, right? So yeah, little you can really do. Best you can do is manage them and make them understand that you need it and you need to pay your taxes, right? So typically you should actually follow up on a month-on-month basis. When they pay you, maybe 1 month or 2 months or 3 months, oh, can you provide evidence of remittance or withholding tax for me with the appropriate receipt? I need to file my return to pay my CIT, right? So you need to manage that. Then you can also, like, for example, you may not, from that stage, they may say, oh, they've paid. You can actually tell your consultant, oh, CEO, can you help me? This is a list of transactions. Can you help me validate or get a report from the tax authority that will say, oh, these are withholding tax we've remitted on my behalf, so that you can reconcile with what you have in your own records to see, oh, what withholding tax has not been remitted, which one has been remitted, just to validate it, that what you are carrying in your books is actually an asset that you can utilize in the near future.
That's fantastic. That's fantastic.
Yeah.
I know we're going to still go on, but there are some questions that I pulled off of what you were saying in a couple minutes ago. And I know that you hinted on some of them, for example, remittances should be what frequency. But can you also touch on the again of what should be, what's the frequency that is by law? There's a certain rate or time that should be.
Okay, all right. So we talked about various taxes. Yeah, okay. So typically the approach is really the same in terms of timeliness, right? For both of them, right? So basically your CIT is paid once in a year, right? So typically you paid within 6 months after your financial year end. Usually for every business, you have to have a financial year end. For most businesses, it's 31st December. But depending on business needs, or maybe you're a subsidiary to a parent company, you most likely have similar year end, right? So your CIT and your education tax will be paid within 6 months after your financial year end. So withholding tax is paid on a monthly basis and usually paid before the 21st of the following month. So like, oh, you mean to pay before 21st of, so for example, for transactions that occurred in January, you pay before 21st of February of the following month, right?
February.
So you have remitted it. Right. Same with value added tax. Now you pay every month, and you also pay before 21st of the following month. For your personal income tax, you pay before for transactions that have occurred for salary paid in January,
So
right?
is
You
that the
pay before,
pay?
yeah, payee, yes, personal income tax, we call payee. You pay before the 10th of the following month. So for example, January, you need to pay before 10th of February, right? And you need to be careful. If 10th falls on a public, for example, on a public holiday, on a holiday, safe play is pay before the earlier date. So for example, if 10th is a Saturday, pay on the 9th, right? Good enough, you can, with some platforms, you can pay and actually just upload. For VAT, unlike the others, you need to actually have a schedule that has been
Okay.
stamped and confirmed by relevant tax authority, by the Federal Inland Revenue Service, based on where your file is being kept. So everybody has a registered
Okay.
office where your record, where you have registered for your taxes, right? So you need to file your returns there, and it's stamped and clearly shows that, oh, it's not just paying for VAT, you need to file your returns. Good enough, you have the Tax Pro, which is an online platform where you can actually file your returns now, right? So you don't necessarily
For
need to
from the
go
federal or
physically.
state government? Federal or state government?
No, so Tax Pro is owned by the federal, yeah, and there you can returns for VAT, CIT, ET, withholding tax. Yeah, you can do that on that platform, right? So you do that and you don't have a problem. So that gives you leeway in terms of filing returns on the weekend. Unlike where you want to go to tax authorities office, most likely not open on weekends, right? So that gives you opportunity to be able to file returns online on a weekend. So that's basically the timelines and the frequency of payment for each of the taxes available to you.
Okay. Can we talk about the percentages?
Okay, so now as regards rates, now CIT, depending on the size of the business. So for businesses with turnover below 25 million, they're exempted from CIT, right?
Okay.
But 25 million, from 25 million to 100 million is 20%, while above 100 million is 30%. Your education tax is at 2%, right?
So can you take
Now,
that above million again?
above 100 million is 30%.
Okay.
Yeah,
And
above
25 million,
30%.
above 20 million?
25 to 100 million is 20%.
20, okay.
Yeah, okay. Now for withholding tax, your withholding tax varies based on the nature of service or what you've entered into, the contract you've entered into. For contract
Okay.
or supply or service is at 5%, right?
Okay.
For professional services is at 10%, right? All these are for limited liability companies, right? Then for contract or supply, sorry, yeah, for rent is 10%, for dividend is 10%, for
What do you
directors
mean by
fees,
rent? Sorry, what do you
rent.
mean
So
by
you're paying rent on rent. Okay, rent is just basically when you rent a property, right? So you have an office space,
mm-hmm.
you're going to pay rent on it. So typically you should pay 10% of that figure to this
Every month
to either
or per annum? Every month.
no, so okay, so this is what happens is on the contract sum. So it's not a question you are paying every month. So the question is that what's the invoice has been given to you. So on that contract value, if the contract value is for 1 year, but you are paying, that is the value of the contract, is at 10% of the contract sum, right? So
Okay.
if you are paying your rent every month and they give you an invoice every month, so it's 10% of that monthly rent figure. But
Okay.
typically, one thing I should make you understand that typically most contracts of rent are already written in the format such that they will tell you that the amount is net of all taxes. So that means that the onus of withholding tax now lies on your hand. So what will happen is that you need to gross up the invoice. So for example, it's a 10 million value invoice. You need to divide it by 0.9 to give you a value of what the 100% will be. So the difference between the 100% of, let's say, for example, a 10 million invoice will give you like an 11.111 million, right? Or 11.1 million, thereabouts. So
Okay.
11.1 minus 10 million is about 1.1 million, right? So that 1.1 million you remit to, depending on who your landlord is. If your landlord is an individual, a partnership, or a sole proprietor, right? You pay the withholding tax to the state's internal revenue service. right? But if it's a limited liability company, you pay to the Federal Inland Revenue Service. So you need to be very careful. There's always a mismatch in which people pay taxes to this federal, which are meant for the state. So, and that's something, yeah. So you need to be very careful because typically most businesses have a TIN, right? Which is your tax identification number. And because of that, you assume that when someone has a TIN, it means that you need to pay the taxes for that individual or that company or that partnership or that sole proprietor to the Federal Inland Revenue Service. However,
Yeah.
that's not the case, right? You need to, most businesses that are individual, if they are doing their returns correctly, they would have what you call a payee ID. That's applicable in Lagos states. In some other states, they may come by other names, but they have a unique identifier for their states. And that's what is used in remitting their own taxes to their respective states where that business in which you're or transacting with is located or registered to, right? So you need to be very careful so that, because at the end of the day, because of you remitted, right now Nigeria doesn't have a structure so that they can be a inter tax service settlement. It's difficult, so you need to be very careful not to remit, because when the other party comes and it does an audit for you, you've not remitted in its own eyes, regardless of the fact that
Right.
you've remitted to the Federal Inland Revenue Service, right? Okay, but that's on a lighter note. So I mentioned the rates, but those rates I've mentioned so far are the rates applicable to companies. Typically, you have withholding tax meant for what you remit when you're dealing with companies, and you have withholding tax when you're dealing with individuals like sole proprietor and partnership. The major difference is when you're dealing with professional services. Professional services, the rate
Okay.
applicable is 5%, right? For when you're dealing with individuals or sole proprietorship or partnerships, right, 5%. But for the others, it's pretty the same, right? Regardless of who you're dealing with. Yeah, so that's the rate applicable. For VAT, is at 7.5%. And that became effective in 2020, right? Before then, you were 5%. So typically, if someone gives you an invoice of 5%, that's wrong, right? Effective now based on the new Finance Act, it's 7.5%, right? So the good thing about finance is that the final consumer of a service or good that finally bears that burden of the VAT. So meaning that if, for example, for services, it's not applicable. Typically, you don't get to recover what we call impute VAT. So, for example, I have bought a product. The product is what, for the sake of argument, is 1,000 naira. The VAT on it, which is 7.5%, is now like, yeah, that should be about 75 naira, right? On the product that is worth 1,000 naira. Now, if I decide to sell that product after performing some additional like work on it. So, for example, let's say I bought the bottle for 1,000 naira. I have now produced water and I filled it in, and I now sell it for one. Let's say, for the sake of argument, I sell it for 2,000 naira. Right? Don't forget that I incurred impute VAT on this service. Right? So now my own VAT will now be my VAT I will charge on this particular bottled water will be 150 naira. Now the way it works is that I have an impute VAT, which is 75 naira, and I have my output VAT, which is 150. I can offset my input VAT against my output VAT, my input VAT, to pay to the tax authority, right?
Okay.
Meaning that 75 naira will be offset against the 150, and what I pay to the government will be 75 naira because I have input VAT. But that's only applicable to businesses that are more into retail, that buy goods and sell goods, and are into or manufacturing. For services, you don't get to claim your input VAT, right? And that's like a loophole, or so a problem with our own tax laws, right? So you need to understand that clear bits so that you don't mix it up, right? So that's typical about the rate. For payee is more of like graduated scheme, right? So it's based on certain thresholds. Off my head, I don't know those thresholds. Typically, you have a template that says, oh, if you are within this band to this band, or your income within this band to this band, you apply a 7%, right? Then from the next band, right, to another band is 11%. And it goes like that on to the maximum, I think 21 or 19% thereabout. But typically, there are templates that already help you do that computation of payee. whereby you don't necessarily need to now start cramming those figures off your head, right? So typically, but yeah, you just need to understand that bit, and that's how it's graduated on like the other taxes. Yeah, obviously, pay is
Okay.
paid on a monthly basis, right? And based on that, yeah. So that's basically about the rates applicable for your income taxes, your various taxes in Nigeria.
And I also heard that you touched on the frequency of the payment of this tax as well.
Yes, I did.
So for the credit, how long is the validity of a credit?
So as of now, it doesn't have an end date. There was a time they're trying to push that you can use a credit note in the same year that the service was enjoyed. However, that was pushed back. There was a lot of pushback and it was never finalized. So in reality, because the truth is, let's not let so there are a lot of businesses that are sitting on huge credit notes, right? That even their CIT, if they don't get new credit notes, they can pay their CIT for the next 5-10 years, right?
Wow.
And that's possible because if you look at the way the business is structured, their their CIT becomes less than 10% of their revenue at the end of the day, right? Because of their very their revenue is quite, or that the nature of their business is quite heavy, that they end up their income tax or their final income tax is usually less than 2% of it. So imagine if I've been paying 5 or 10% on my revenue every year. It means that I would have enough credit notes to fully pay my taxes without a problem, right? So
Right.
it doesn't have an end date. The government has pushed at some point, but there was a lot of pushback. Yeah, no, I don't have the credit note available, right? Which they are trying to work on to make it readily available, right? So as of now, there's no end date for the utilization of your credit note.
Okay. Fantastic. So to the matter, especially for some businesses that do not have this is, and keeping their books to get there and so on and so forth.
Okay.
As of today, right? Again, not I didn't have the knowledge of paying my taxes, to be honest. I had no idea. So all I knew was I wanted to pay my tax. But how to go about it, I was clueless. So what would you have people to do? Potentially is a service to people.
Okay, so this is what I would say, right? If you're going to pay when you establish your business, right? I would advise that as much as possible, if you have a friend as an accountant, call them and ask for advice, right? If, for example, because typically startups want to keep their costs low, right? A business that is just trying to strive, you're now telling to, oh, you should now get a consultant to pay for your service. Typically, it may be difficult at that point. But with relationship, right, you can always have a friend that is within the accounting space to price on level of guidance, right? Because the truth is that he can help you kickstart the process. Or you can begin on your risk appetite and you say, oh, I don't mind paying a consultant. You get a consultant that would help you provide that service, right? And say, oh, they will agree a retainer with you. And trust me, a good consultant, if you're able to reach out to a consultant who's also starting, will be able to give you a friendly package that you can both work with, right? So that it doesn't like impact the growth of the business. Because the truth is, whether I like it or not, yeah, it's a value added service, but whether I like it or not, it's a cost to the business. And as much as
Yes.
possible, you want to keep your cost low, right? So if you cannot, if at the end of the day, the money you need to grow is not eating to that money, one way or the other is impacting your growth. So at the end of the day, the thing is, how can you keep your cost low, but remember, still remain compliant? Because the truth is that you need to remain compliant with the laws, because what you think you're saving in terms of not being compliant with tax, you pay it in the near future. And that payment would come with interest penalty, right? So first thing I'll tell you is, regardless of how small you're starting, from the very beginning, remain compliant, right? So now my typical advice to you is get a friend who is close to you or who is an accounting space, or a friend of a friend. So you may not know someone directly, but you know someone who most likely knows someone within the accounting space. Trust me, they'll be willing to support you and say, oh, okay, do this, do this, do this. So typically you need to know first, when you register your business, the way things are done now, this your TIN, which is your tax identification number, comes with the CAC document. Typically, your sales certificate at the bottom left, you see your tax identification number. The moment you get that, now typically that thing, they would have already assigned it to a tax office, which is close to based on where your business is registered, right? So, or you can actually go and find a way to move your documents. If the registered in a place that doesn't seem convenient to you, you can actually move your file from a point A to a point B, depending on where it's located. With the help of a consultant, you can get your file moved to a tax office that suits you. Yeah, that way you're able to interact with the tax authority in that space. You have your file there, and they're able to help you do your returns. So typically, you register where they ask for certain documents to use a sale, your CAC, a copy of your CAC document. They'll give that, and you fill a form, contact details, and all. You get there, and you fill all the necessary information. You have it registered there. Now, typically, for most taxes, they're kind of how I call it, they're kind of routine, right? So the same taxes. So if you've remitted withholding tax on rent, for example, the same process all the way. So if you're looking at being trying to keep costs low, you can get a consultant that can walk you through and say, oh, these are the withholding tax you need to pay on this kind of transactions. And because of you do the same set of transactions on a month-on-month basis, by the time you do one or two together or three together, you can tell that, oh, this is how I need to do this. If you don't want to, I get a consultant. He can walk you through and say, this is how you should do it. Then he can help you now do like a vetting and just share the schedule with him. And most likely your cost will be lower compared to if you just tell him, these are my transactions, help me deduct withholding tax and pay on my behalf. Obviously, your fee will most likely be higher. But if you do it yourself and it's just going to help you vet it, obviously to be cheaper, it will just help you go and file your returns for you and it's fine, right? VAT may be a little bit technical, right? Now, so the basis of how your VAT would work is that before now, your VAT was based on accrual, meaning that if I provide a service, the fact that the customer has not paid me, I will need to pay my VAT, right, on a monthly basis. But now it's on cash basis, meaning that you only pay the VAT when the customer has paid you, right? So meaning that you need to be able to properly match payments with services rendered and be able to identify that, oh, I have collected this VAT from the customer, so I need to pay it. That way, it helps you manage your taxes, right? And good enough, if your turnover is below 25 million, you don't need to charge VAT on your invoice, right? Meaning that you don't need to charge VAT and you're not paying VAT. But you need to be careful because once you hit the 25 million threshold, you need to start paying and start charging, right? So you need to be able to prove that, because obviously if you start charging, there will be a pushback from the customer saying, oh, you need to charge me VAT for why you pay me now, right? So you need to clearly be able to show that, oh, you've met the threshold, and you need to show the fact that you're actually remitting, right? So you have your VAT certificate just to be able to justify the fact that you're liable to VAT and you need to pay, because otherwise tomorrow the taxman, in short, where it goes to first is your VAT, your revenue. Just do 75, in short, just pull your bank statement and say these are all the inflows, apply 75% and say you should have remitted this amount of VAT in the period, and say you've not remitted. So you need to be able to clearly show how you've not met that 25-minute threshold and how you met it and when you started paying. So it's tricky, right? So people have not really had the fact of an audit based on that. So it's still tricky and there's a lot of subjectivity to it, but yeah, but with time we'll get over that. Yeah.
All right. So for backlogs of tax payments that the number of people that are not remitting their taxes are pretty much have, what do you think are the penalties for that, and how do you think they should go about it?
Okay, so typically I think for VAT now is about 50%. So every month you fail to remit VAT, you pay 50,000, right? Then subsequent months after for non-payment, there's a 25,000 fine on it. So that keeps aggregating, right? So if you're not careful, before you know it, you'll be grossing almost ₦1 million in 1 year if you've not remitted VAT for 1 year, right? Because for January, for example, if you fail to remit your VAT in January, by February, which is the first month of default, is 50,000. Then the remaining 10 months, 25,000. So imagine 50,000 plus 10 times 25, that's already 250,000 plus 50,000. That's about 275,000. So just look at it down the line. It keeps aggregating all the way to the end of the year. So that's a fine already. Now, typically, when you don't remit, when the taxman comes to do like an audit, for startups, you may not get to have an audit until like your third, fourth, fifth year of being in business. But when they come, they aggregate and just apply based on the prevailing interest rates, your money, based on the money market, they apply the interest rate and penalty at 10%. And those are the fine that could possibly exhibit and come to you as a result of you not paying. Now, in terms of backlog, the idea for me is as much as possible, you've not paid. If you pay once, it will obviously hit your cash flow, meaning that you may not be able to even run the business which you've established. So typically what should happen is find an approach where you pay gradually over time and clear the backlog. You don't want to pay once and now not be able to run your business. Your business, if you kill the business, you're not able to pay your taxes. So typically what will be is get someone to do an assessment of how much taxes you should have paid, right? It reviews all the backlogs and identify, oh, you should have paid this amount of taxes, right? Then you now start paying them gradually over time. And by the time you clear, that way you'll be able to prove that, oh, you've paid. Because typically what will happen is if you have a file in the tax authority, they do what we call a DEX review, right? Where they just pick your file, do an assessment of compliance, and write to you and say, based on a review of your their DEX review, they come up with the tax liability, right? And that may come pretty much before you have a tax audit. So your ability to comply from that point is good for you, right? So just think of it, have an assessment, identify what you need to pay, then gradually pay it down over time. Yeah. So that doesn't impact the business running.
Okay, that's great. That's great. If you guys have any questions, please feel free to drop your questions. So Oladele answers your questions. Wrapping up the session today. Again, we are talking taxes, a guide to business tax for business owners. Knowledge that every owner should have in Nigeria. All right, Oladele. So what have been the worst tax situation you've ever seen, and how did you help the person overcome them?
So the thing is, if I tell you the worst tax, I've not recovered from the worst tax situation I've seen, right?
Wow.
So the truth is, the worst tax situation is you would have when there are no proper books being kept at all, right? So because the first thing is for you to be to pay taxes, it means that you have books, proper books in order. So I was telling, like I told you, it was good you had a bookkeeping session before the tax session. For you to be to pay taxes, right? To be to pay the right amount of taxes, it means you have good books, right? So if when you see someone wants to now get out of a tax situation and doesn't have proper books in place, then there's a problem. Because first you need to first settle the bookkeeping. Yeah. Typically, obviously, we both know how Nigeria is, right? There are ways that people cut corners and all, but that's not the way we should go. In short, that's not the way anybody thinking to a good future in Nigeria should think, right? Of cutting corners. So if you want to do it right and you want to pay right, first will be what exactly should my books be, right? So historically, I've not kept my books. Start from the bank statement analysis, because that's incomplete record. Analyze it, identify the transactions, what are they meant for, what they should be, right? Typically, the taxman is worried about, like Jide mentioned, REN, wholly reasonable, exclusive, and necessary. Transactions that don't meet that criteria, the taxman will disallow it, right? So, for example, common mistake that you see people do is you see tithes in a company's books. That expense, the taxman is happy to see it because he will disallow it because in no way does not meet REN, right? And it's a common mistake made by common business owner. Yes, we are quite religious, we support. Personally, if you want to pay tithes, what I would suggest is as you pay yourself salary, out of your salary, take out your whatever you want as tithes and pay. The business itself is not required to pay tithes. If you decide to pay it, it means that you've told yourself that that expense will be disallowed when the completion of your CIT, because in reality, it does not meet the rent test, right? So the worst situation is improper book, because first you need to first get the books right? So that you can identify what exactly should be the right amount of taxes to pay. But if you don't want to go that approach, you go the approach of the taxman has written to you, then you find a way to justify how you've met those lines. Otherwise, you're saying that, oh, this amount, the right man is right, and I'll just pay. But trust me, if man finds out that you pay, yeah, you have turned their cash cow. They will just keep bringing different liabilities to you over time, and you have get in trouble with it. However, the right approach would be get your books in order. Yeah, get your books in order. Try to sort out what should be. Then take your time, identify what taxes I should have paid. Pay them, identify and show to the tax man and see. You come out with this assessment, I'm meant to pay 200 million. However, based on the records I've kept, this is my total tax liability. Then there's always a back and forth audit reconciliation meetings, clearly defining, oh, this is the final liability, and there's back and forth, right? And based on that final outcome, you come to a resolution and you pay based on the final outcome of that audit, and that closes the audit, right? So that's a simpler approach. But like I said, the hardest one I've been in, I have not resolved it.
Wow. All right, guys. Absence of a question to wrap up this episode for today.
So there are actually questions in the chat room.
They are.
Yeah. So the someone said, could you please go over withholding tax and what input and output VAT is? That was the first. That was the second question. The first question is, if you have a business name registration, you need a specific payee for business, or are you supposed to use the personal payee of the owner? So typically, it's the owner, right? No, the business is not really paying tax. You know, the idea behind saying you have a business name or have a company is that you want to separate the owner from the business. So himself, the company is an entity of its own, right? But when you're dealing with business name, as much as possible, the owners are actually the people, right, of the business, right? So it's not the business paying itself; it's actually the owners. So you are the one that will be paying, right? Typically, what happens is the employer is required to do a filing in January where it does an assessment of pay of all his employees. However, for the business owner himself, is required to file a return by March. That is when his own is due. That's why you do pay. Now, withholding tax that have been remitted on the name of the business could actually be utilized by him for his own remittance, because in reality, the business is tied to him, right? So withholding tax that have been paid actually be utilized when finally filing your returns as an individual, right? And that is how it should work. So the business name does not pay taxes, right? It pays payee. That's your own tax, because it's the individual that you see. So you have partnership where you have like 4 partners. Their payee is what the business name suffers, right? For those individuals. And that's how you settle taxes for individuals. Unlike your employees, where you pay on a monthly basis, you don't necessarily need to pay for yourself on a monthly basis. The law doesn't give you any, oh, you need to pay on a monthly basis. You can decide to pay on a monthly basis, but the idea is that before March, when you're filing your return for yourself, you should have fully paid or assessed yourself what your personal income tax should be, and now remit based on that, right? Based on the final outcome. Yeah. So now the next question was withholding tax, input VAT, and output VAT. So withholding tax itself is an advanced payment of tax, meaning that the government cannot run itself, right? If it doesn't want to wait till the end of the year to say, oh, I pay my withholding tax, I'll pay my CIT or my ET to run my business. So the withholding tax is saying, pay me in advance, right? As you earn or generate income for yourself, pay me money so I can be able to run the economy, right? So that's the idea. In reality, it's not an additional tax, or how do I put it? Unlike VAT, whereby it's a cost to the business. Withholding tax is not a cost to the business. It's someone just saying you have you have an income, take an amount of it, pay, but you're going to utilize it when you're paying your CIT, right? That is your withholding tax. Your input VAT is saying someone has sent you or supplied goods to you, right? The person has charged you VAT. So the output VAT for him is input VAT for you, right? Because it's like an end-to-end process. Like, oh, someone has supplied service to me, or in terms of goods, supplied. What example I used was the bottled water. Someone supplied me the bottle itself. He has charged output VAT, which forms an input VAT for me, right? I add water to it and I sell the bottled water, right? What I charge is output VAT. The bottle itself, when the person supplies to me, is an input VAT. Typically, what should happen is that when I sell this, when I pay my VAT, I will say, what may I charge as output VAT on this bottled water? less the input VAT on the person that supplied me the bottle itself, right? That's my input VAT. So I pay the net difference, the net of them. So for example, in the case where I said the bottled water costs 2,000 naira, the output VAT is, for the sake of argument, is 150. Yeah? The 150 less the 75 naira, which was my input VAT from the person who sold me the bottle. I now pay 75 naira. So the output VAT is from me to my consumers. The input VAT is from my vendors to me. They will call it output at their end, but for me, it's an input because what I have is a raw material which forms part of the products, the costing of that bottled water I have, right? I don't know if I answered your question, Femi. Yeah. Okay. So okay. So no feedback from. Okay, so now, okay, someone said, what's the implication of registering a company as a business name and its limited liability? Right now in Nigeria, if you know your turnover is less than 25 million, it's better to register it as, okay, it's better to register it as a limited liability company. Like I clearly explained, you're exempted from CIT, right? If you are doing it, if you are 25%, right? So you're exempted from CIT if your revenues, if less than 25 million, right? But like your personal income tax, obviously you pay on it, right? So obviously, the only thing that you have is that if, for example, if I have a limited liability company and I pay myself dividend, the final tax I will pay is my dividend tax, right? Which is 10%. And that is the only tax I will suffer on that income, right?
Okay.
But if I have a personal income, if I have a business name, whatever I pay myself as salary and all, I will end up suffering. So it's better for me to pay myself dividend at the end of the year and just say, oh, I pay 50 million and 10% 50 million is just okay. No, not let me use 50 million because that's already above 25 million. So let's say, for example, I pay myself 10 million, for example. I do 10% of 5 million, which is 500,000. Yeah. Or five, so 10 million, which is 1 million, right? And that's all I'll suffer. But if I do 10 million and I'm paying payee on it, I'm most likely, my threshold will most likely hit between 15 to 20% thereabouts, right? That will be my effective tax rate. Obviously, I paid more taxes. So for small businesses that are doing less than 25 million, it's better to register as a limited liability company than to register as a business name because you most likely pay more taxes as a business name, right? But if you are doing above, then most likely maybe business name will pay you, right? But in reality, if you are thinking of growing the business, right, really growing the business, I'm thinking of bringing investors, right, on the long run, a limited liability business will pay you because that's when you can bring in more investors and bring them as shareholders into the business and all. But if you're doing a small business, obviously you would most likely be paying them as loan, yeah, not as equity investors in the business. So it's easier to sell your business to a potential investor as a limited liability business than a business name. Yeah.
All right. Thank you for answering our questions. And the KRA rapid five questions, which is just asking you some questions that are related and not related with what you do for a living. So to start up the rapid five question way, so why do you do what you do? Like, what do you enjoy doing what you do?
So problem something I find interesting. Um, right now, I feel that you act value through problem solving, right? And also
Sure.
makes me happier knowing that I've solved the problem, right? There
Okay.
are a lot of problems in this country. We all know. Typically, you hear people complain about problems, right? And I am of the opinion that rather than complain about problems, why not find a way to solve them, right? So within my own space, if I'm able to solve problems that people face, then I've reduced the number of problems that are available within that space, right? So for my if every individual takes in the responsibility of solving problem within their space, it means that we have less problem in the world, right? And trust me, it'll be a better place for everybody, right? So, for example, I'm sure that by the time we solve the problem of the improper books, right, where I was trying to solve that problem, obviously we're in a better space compared to not being able to solve the problem, right? Obviously, there are very challenging problems that will give you sleepless nights, but when you solve them, you're a happier person.
Right. I totally agree. All right. So what's the last thing you learned as a person? What's the last thing? It can be common, informal, whatever it is. What's the last you learned?
Last thing I learned, right?
Yes.
Help, right? So last thing I learned is help. So like
Okay.
me and some of my partners, we run accounting yard. Basically, it's a small business. Basically, the idea is to help young accountants and business owners to help improve their bookkeeping and also help our accountant improve their knowledge in account. Our mantra is share, learn, help, and there's joy in helping people, right? And I've learned that you do a great deal when you help people, right? Because it's like myself would say, pass it on, right? If you help a person, you've added value to that person, and the person is able to solve
Yes.
another problem for that person. So
Yes.
from a chain, is a chain reaction, right?
Mhm.
So if you do, you pass it on. The next person sees the person in that position, it stretches hand of help to that person. So on the long run, you don't know how we are connected, right? We are all connected in ways that you don't know. So you help this
Yeah.
person's helping another person. The person may
Very
help
true.
someone who needs help, who is connected to you. So help. Yeah.
Wow. Okay. So what's your hope in Nigeria as a content?
What's my hope? My hope is
Yeah.
that people appreciate bookkeeping and being compliant with laws and regulation. Because from experience, I see that a lot of people don't want to keep their books properly. They just want to pay less taxes and move on. But in reality, there's a lot of potential because whether you like it or not, the SME space is a very big space, right? It's a space that a lot of us would leverage on. Is a space that a lot of people, whether I like it or not, you hear that the employment rate in Nigeria, underemployment rate is quite high. The SME space is one of the few spaces that can help us mitigate or reduce that unemployment level, right?
Mhm.
So whether I like it or not, you're an employer of labor. Whether I like it or not, I don't know how many employees you have, but you employ a lot of people within your space. I myself am an employer of labor one way or the other, not directly, maybe contracting, helping someone, right? So whether I like it or not, the SME space has a lot to do in terms of helping people, and even the government can do, right? Because whether I like it or not, the SME accounts for a huge portion of our GDP, meaning that whether I like it or not, it's employing people. Our friends who actually employ people. So whether I like it or not, the problem of unemployment, one way or the other, we as SME owners of SMEs, we are solving that problem space, right? So it has a lot of potential in solving up problems for small business, for people, and getting a lot of people out of that space, right? So SME has a lot to do, and I think that people should look at bookkeeping as a way to grow, right? Because you keep your books right, ability to convince an investor to join you is easier compared to when you have
Well,
improper books,
I'm telling
right?
you.
It's so it's like an investment, right? You're paying it now, but in the long run will yield value to you, right? So
Mhm.
don't miss that opportunity. Start right. You may not necessarily have the ability to pay for a software. Just keeping an Excel sheet tracking your expense when an accountant comes to come and provide a service to you, because if you kept your books in an Excel format, just being able to properly classify expenses and being able to track it, what the accountant needs to do will be limited. Secondly, separate yourself from the business. Don't typically the problem that most small businesses owners have is not being able to separate the business from themselves. Now, the business cannot pay you. However, you need to be able to tell yourself, this is the amount I need to earn from the business, and set that aside on a monthly basis and pay yourself. For your employees, when you employ an individual, right, have a contract with that employee. State this is
Yes.
the amount I'm going to pay you, compute pay, and pay the person. Typically, I won't lie to you, it's additional cost to the business because imagine if you agree a contract with someone 50,000, for
Mhm.
example, on a monthly basis. If you pay the person is happier. But if you agree a sum of 50,000 and 10% going to pay payee, it means that the person will have a lesser net pay. Obviously, your employee is
Yeah.
not happy, right? So if you
Mhm.
want to agree a net pay of 50,000, it means that most likely the total cost to the business will, for a sake of argument, will be like, let's say, a 65,000 because you're going to pay
Yeah.
15,000 to the tax authority. That's
Mhm.
additional cost to the business. That's additional burden. you cannot easily compete with another person not paying taxes. However, because you have a long-term view of the business, right? You stay compliant from the very beginning. By the time you need to, by the time the taxman comes, you don't need to pay penalty or interest because you're already compliant from the very beginning. But on the long run, the person would be paying more taxes or more liability for the person who is not compliant from the very beginning. And the truth is that when you're non-compliant, when you want to switch to being compliant, you'll be scared because you have a backlog to
Of
pay,
course.
right? And you don't be like, oh, how
Yeah.
am I going to pay this? Mogbe, mogbe, mogbe.
True.
You'll be scared. So because of that, you're not like,
True.
and the truth is that whether you like it or not, one day you
Mhm.
enter into the tax net of the tax authority, they identify you and they will slam you, bam. And that thing that you're scared of, that you refuse to do from the very beginning, you pay it interest and penalty. Except you
Yeah,
want to be
very true.
shady, right? If you want to do it right, your you pay everything out of your, and trust me, nobody wants to be in that space. So if you're
So,
looking to have a long-term view of the business, pay little by start paying small by small. Get someone. If you think that the cost of compliance is huge, get a friend. Get consultant who are starting like you, because they are starting like you. They will most likely be very friendly in terms of it. And true that the average
comfortable.
consultant who is also starting with you will be flexible and wants to grow with you. Because if he grows
Yes.
with you, you get
Yes.
referrals from you, it's better for him,
Yes.
right? Based on that, there's a relationship. Trust me. So we're all growing. We help each other and we grow together, right? When in time you
Absolutely.
get bigger, you can say, oh, you want to get an in-house accountant and all. But obviously, a relationship is long term, right? Start
Mhm,
small,
mhm.
be compliant, and you grow over time.
I think it's fantastic, to be honest, and I'm super thankful for you coming on board. I'm super thankful for you coming on board, Oladele. I don't know, can you answer the question before we close out the session for 2 minutes of the board? Can you answer the question? Do you want to take it on?
Okay, so let's read. For an expense item to pass rent test of the taxman, what particular expense can be allowed to be written off? No, so typically, if it's staff welfare, obviously, yeah, it's an employee. If it's a contract that defines that, oh, this person is entitled to these benefits, why not? So, for example, you have a meeting and you have meals during the course of the meeting. It may be difficult, but you can actually prove that it was a meeting expense and you incur that cost for the business. Some things are quite dicey. You need to be able to provide maybe precedents, right? Example of cases that have been passed that you to show that, oh, this particular scenario passed the rent test during the particular um, what's called it, tax audits where they had go into law precedents. You can tie it to that. But typically, you need to just, when you look at rent test, you look at it, ask yourself, this thing, if I was running the business, will I incur this cost? Right? So that's a simple way to just tell yourself. If you tell yourself that, oh, for example, office space, if I was not running a business, will I have an office space? No. Right? If, for example, if I'm paying someone salary, if I was not running a business, will I be paying the person salary? The answer is no. I have a maid. I pay from my office business. I pay for my maid. If I was not running business, will I pay my maid salary? I'll pay her salary. So obviously, it doesn't meet the rent test, right? So typically, petty cash, you have transaction. You have, for example, you tell the person to go and buy consumables that the office needs. Typically, if you're not running that office space, you will not need that consumable to run it, or someone you need petty cash to run to go and pick up an item required for you to run your business. Transport to a third-party location. If you don't run that business, the person will not be able to pick up that item which you require in your office space. So typically, if you go through yourself, you ask yourself the typical question like, oh, this item, do I require it to be able to do my business? If the answer is yes, obviously it meets the rent test, right? Yeah, so that's typically a simple way to actually carry out your rent test. But like typically donations are typical examples of things that may most likely not meet the rent test. But there's an exclusive list where if you donate to, the tax one has a list where you can donate to that will meet donations. But typically is an example of things that will not meet rent test. Yeah.
Fantastic. Fantastic. Thank you much, Oladele, again for your time. And for every other person, we are having quite a number of guests, interesting guests that are to talk and running a successful business in Nigeria. Please join us next week's day at 9 a.m. I'll be book as well as the platforms really. And thank you. Have a wonderful week ahead.
All right.